But Devang Mehta joins us on the show to talk to us about the fundamentals of the market. Devang, hi, good to be speaking with you. To begin with, I wanted to discuss the IPO action. If you have any coverage or any research idea from the IPOs which are underway, DOMS as well as India Shelter, because I was looking at the subscription data and DOMS is already subscribed 4 times.
Hi, thanks for having me on the show. No such luck here, so don't track this space as closely and don't have any view on that. But of course, as a general, I think IPOs have been garnering good response, good paper has been absorbed in the market. So I think, yes, most of these IPOs have some quality or something left on the table, most of this. And that's why I think most of these are getting subscribed. And there's no such euphoric reactions to this IPOs. Good paper is having sort of good demand. That's what only I can say.
Yeah, good demand is something which is quite visible as far as all of these IPOs are concerned. But separately in the market, it is the power space that deserves mention. So within power itself, Devang, what's the view after the run-up that we are seeing both in utilities and financiers? What should investors do now?
Ideally, I think after a long time, it's this sector has gone through hibernation, if I can say, more than a decade. After 7-8 years of hibernation, this sector has come out, be it infrastructure, be it capex related, be it transformers, be it power sector, or be it even ancillaries for power as well as energy, even renewable energy to a certain extent. I think most of these sectors are here for the next 3-5 years. It's quite visible that government has made a lot of efforts to sort of boost the capex, 10 lakh crore infrastructure spending on power. I think we need all types of power, be it thermal, be it renewable. In renewable also, it can be probably even solar or for that matter, even wind power. So I think most of these industries are going through a good period. We also know that the private sector is going to spend, and then the demand for power as such in an aspiring nation is going to grow leaps and bounds. So my sense is that this entire space, yes, they have run up a lot. But somebody who still has a 2-3 year horizon can ride this wave, because consumption has traditionally been India's strength. But now probably with the return of capex, I see that this cycle probably can last the next 3-5 years. So it's now more structural in nature. Yes, one has to just be cautious as such that the entire market is doing well. There has to be certain gravity. But as I said, some of the sectors, energy, ancillary companies, power companies, we keep on liking, and I think that there's still a good upside to most of them.
You know, interesting that you talk about renewable energy and the entire power transition space, because N. Chandra, on the sidelines of the Economic Times Awards for Excellence jury round just last evening, did talk about this as being one of the key pillars amongst four for India's growth into the next leap forward.
There are 4 trends. The first one is, you call it digital or artificial intelligence or whatever. By far, India probably has the best digital public infrastructure. And we have leveraged this digital public infrastructure and have done national programs of mass scale, which you cannot find too many examples around the globe. So this backbone will play out in creating new business models. There will be more startups and also more delivery models even in established companies. The second one on energy transition, our energy today, what we spend, will quadruple in the next 25 years. That's the kind of demand. So we are probably the only nation which will produce all the renewable energy for additional growth and not for replacing coal energy. So it's always easy to support growth than go back and replace, shut down something and substitute it with new energy. So I think the energy transition is a very exciting thing, and I don't think we'll just stop with solar and so on. There will be more technologies that will come. Definitely hydrogen will come, but there are many other things will come. SMRs will come. So I think over the next 25 years, it's going to be a very exciting energy story. Third, on the supply chain transition, whether it is a global crisis or not, the supply chain of global companies requires a very strong base in India. And we are seeing that. It will happen in batteries, it will happen in electronics, it will happen in semiconductors, it will happen in pharma, it will happen in materials, it will happen in biosciences, food. So I think this opportunity is enormous, and this is happening now. There is no question that there is any doubt it is happening.
Okay, so that's the latest coming in from N. Chandra. But in terms of the other stocks which are passing around, it's GMR Airports, which is doing okay. Nazara Technologies has had a good run, and then PSU banking names have also been doing okay. Neera, what's your pick and the recommendation within, let's say, GMR, Nazara Technologies, and the public sector banking names?
Looking at the public sector banking names first, I really believe, just as, one of you said, these stocks were in hibernation for the last 8-10 years. And, finally in the last, 1.5, 2 years, they've actually come out and performed very well. But still a lot of traction is there left in these stocks. So the smaller ones or the mid-cap ones are the ones where I really believe, they can probably double in the next couple of years. There's good volumes that have gone in. So the likes of Union Bank, KTK Bank or Karur Vaishya, all of these, a lot of buying has gone in, in the last 1 year or so. And I believe the patterns that they are making, they can probably, in this near term, probably move up another about 15-20% within a month or so, because they finished that 2-month consolidation for the near term, and they've all broken out now with the banking index. So they should do well. The top picks would be a KTK Bank, where I believe, this is a 15-yearly breakout that this stock has got. This stock can move up towards that 280 to 85 odd levels, and Union Bank, a consolidation breakout, it can probably reach 150 odd. Also would like to comment on GMR Infra and Nazara that you told. So, GMR Infra, last 1 year or so, this stock has come up from 11 odd levels to 77. So it's almost 7x. And it is now gunning for a big breakout above that 82 levels. 82 is a very important resistance area. Once that is broken out above, that is when you will see, a very aggressive move coming in this stock, and probably it can then reach 125, 130 within no time. But it is near a resistance zone, and I would suggest, if you've bought at lower levels, this would be a good level to book profits from a near-term perspective, and then probably buy again once a weekly close has got above that 82 odd levels. So that is that for GMR. And Nazara has made a good consolidation, a double bottom kind of a formation, broken out above the same at 750 odd, and now is within a small consolidation, a flag kind of a formation. I think this stock will also break out. The breakout zone for this stock is around 900 odd. Once 900 breakout is got, that is when you will see the aggression in this particular stock, where the stock can come up very fast towards that 1250 odd zone. So all the stocks that you mentioned, they're great, and probably gunning for newer levels once those breakouts come in.
Okay, let me quickly take it across to Vinny as well, as we begin to wind up for the day. Just 15 minutes or so left to go for the closing bell. Vinny, what is the dealing room chatter like? What are the stocks that they're talking about?
So absolutely, the dealing room chatter is around VIP Industries, and this one has been a bust in the last 3 trading sessions specifically as well. And today also trading with strong gains as of now of 7%. Now, what we are understanding is that, a lot of funds are showing more interest in the stock as well. They're accumulating on VIP Industries, especially in the last 3 trading sessions. Volumes also have been significantly higher as well. And what we understand is that domestic funds are accumulating in other stock as well. And when you look at it in the last quarter, actually domestic as well as FII, their share in a bit of a reduction for VIP Industries, but seems like they're checking in again in VIP Industries, specifically seen in the volumes in the last 3 days. And obviously the move also in the stock in the last 3 days has been quite significant. Specifically last 5 days also a 9 to 10% return is what the stock has already given, and seems like the company may also be looking to pay some of its debt also in the coming days. So keeping a buzz around VIP Industries, FII as well as DI seems to be checking in.
Okay. Okay, Vinny, we'll leave it at that. That's the buzz coming in on VIP industries right now. And that's definitely one stock which is talked about. But look at what the OMCs as well are up to. HPCL in particular, the fact that, crude has actually fallen from that peak of 90 odd and it's now around that $70 per barrel mark. In fact, lower than that. And that's clearly turning out to be positive for marketing margins of most of these OMCs. And they've really been in an upward trajectory since then. Devang, just wanted to understand where within the entire crude sensitive basket, I mean, be it tires, paints, OMCs, etc., where does your preference lie?
I think, yes, this is a very good, a factor which is highlighted, crude trading around 70. And I think there's been a deep correction, sharp correction that commodities as well as crude has experienced. I think already we have seen good margin expansion in the last quarter on the back of lower commodities. And I think that trend is going to continue for the next couple of quarters. That at least seems to be the case right now. On the spaces that we write, yes, I think a couple of spaces which have underperformed, particularly the home improvement building materials and precisely a sector like paints and adhesives. I think if you look at the overall complexion of the market, I think most of these companies seem to be on a different tangent itself. I think this can probably get corrected with now a lot of flows also coming toward large caps. I think earlier the mid caps and the small caps were where the flow was the highest. But last 10, 7, 8 days, we also seen money chasing some of the quality large caps. So I think some money can probably come into this type of spaces, paints, adhesives, even OMCs, which are so-called crude sensitive. So I think this is a space which probably can see a bit of a move in the next few days. And some of them are fundamentally great companies to sort of be into at these valuations.
Okay, point taken. So that's a verdict coming in on some of these buzzers. But pharma is one space which has been actually doing okay. Biocon was one stock that was coming up on my radar because that managed to see a bit of a perk up in the last few minutes. And then, of course, it's other names as well from the pharma sector, the likes of Glaxo, Aurobindo Pharma, Glenmark, Alchem. All of these stocks are holding up comfortably. Devang, what's your view on pharma and which is the pocket that you like the best?
A couple of sectors which are still not much in limelight, IT, pharma, more dependent on exports, the sectors which sort of have lagged. As a contra, probably both these sectors are still, if I can put sector as a basket, most of these companies and the sectors are also sort of not very high or rich in valuation. There are a lot of opportunities here. Particularly, we like two spaces in the pharma. One is the MNC pharma space. Just an example, companies like Abbott Laboratories, Abbott India rather. So these are companies which probably are doing extremely well. The earnings have turned. A lot of these companies run with negative working capital cycle. I think these are companies which probably a lot of investors would want to hold in their portfolios. There is also the entire CRAM space, the contract research and manufacturing space, where there is going to be a re-rating which can come on the back of a lot of research work which they do for a lot of MNC companies. So I think these are precisely two sectors which don't fall also under a lot of US FDA radar and don't encounter negative news as such very regularly. So probably good safe bets to be into.
Since we are talking about energy transition and how Mr. N. Chandrasekaran was talking about it as the key pillars that India should be watching out for, one of the big events that was happening globally was COP28, which just got over yesterday, but there was a lot of debate regarding the use of the verbiage and there wasn't any consensus till a few hours ago. But finally, it seems like the deadlock is over and there is a bit of a consensus. What's the latest and what's the implication of all of that? My colleague Bhavya is joining us with the latest.
Right, so the COP28 talk, which ended in Dubai in a deal that saw a commitment to transition away from all fossil fuels for the first time. The president of this year's UN-sponsored summit, the UAE Sultan Al Jaber, brokered an agreement that was strong enough for the US and the European Union on the need to dramatically curb fossil fuel use while keeping Saudi Arabia and other oil-producing countries on board as well. The agreement calls for countries to quickly shift energy systems away from fossil fuels in a just and orderly fashion, qualifications that help convince the skeptics. Under the deal, countries also are called to contribute to a global transition effort rather than being outright compelled to make that shift on their own. Sultan Al Jaber, who is also the chief executive officer of Abu Dhabi National Oil Company, brought the cable down to confirm that the deal early on Wednesday afternoon, a day later than initially scheduled. While the outcome falls short on the phase-out most countries wanted, it does break a new ground. No previous summit has mentioned moving away from oil and gas and the fuels that have underpinned the global economy for decades now. Now, how quickly that becomes a reality won't be decided by this diplomatic horse trading that clinched in the today's deal, but by investors, consumers, as well as national governments. Still, the Dubai decision is an important marker in the global direction of travel toward a low-carbon energy system on a global level. The text also includes agreements to triple deployment of renewable power and double the rate of efficiency gains by the end of this decade. The COP28 language pushing a decline in fossil fuel use will send a signal that the world is now thinking about it and change the way investors assess the risk of those ventures.
Okay, Bhavya, thanks for that. That's the takeaway coming in from COP28. In the meantime, still flying high for REC PFC. GMR Infra is the other one, holding up 7.5%. Biocon holding up 5% nearly. And NMDC is the other one, which is standing tall by about almost 5%. There's, of course, NTPC, there's M&M, Hero MotoCorp, L&T. So interesting that much unlike yesterday, we're still pretty flat at an index level. Today, of course, has been a lot more volatile than that. Started off quiet, dipped, and then again, we've recovered, lost ground. But today you are seeing more active user or rather movers within the large caps. So L&T, SBI, M&M, Eicher Motors, NTPC, quite a few winners out there within the large caps as well as, of course, the broader markets are lively. I mean, if there was one trend that's largely IT, that's taken a backseat, but besides that, all sectors are holding out quite okay. Sure enough, it could have been a lot better from the likes of an ICICI Bank and HDFC Bank. They're a little tempered still in trade. Kunal, not really seeing a material move, even though just about everyone on the street is bullish on the ICICI Bank, HDFC Bank, Kotak Bank trio.
No, but so there are two ways to look at it, Aisha. From the pre-results, state election results till now, all of these stocks have moved in a margin of 5% to 7% broadly. So I think ICICI Bank has moved up some 70 or 80 points. You've seen Axis Bank moving up by 10% plus. But then the last 3-4 days of this consolidation or this range for the indices, you're seeing a very staggered kind of a move. So for example, yesterday you had, I think if I'm not wrong, Axis Bank, which was closing at the day's high. Today you have Axis Bank, which opened at high, but the stock has been underperforming. And till the mid-session, you had Kotak Bank, which was doing pretty well. Now you have HDFC Bank, which is going through a mild correction, but IndusInd Bank is looking strong. So what's actually happening is that within, if you're a very, very short-term trader, then it's very difficult to call in the move that which stock would probably lead the momentum as such. But then you have to have a time frame which is at least a couple of weeks, if not more, to try and gain maybe a 5% to try and 10% upside into these stocks. So I would suggest not to look at this, as a very short-term kind of a move because the signals are a lot more mixed. But then with a time frame of a couple of weeks, I would expect these stocks to move up by at least a margin of 5%.
Fair point. That's the take coming in at some of these private banking names. Extend your time horizon and you won't be disappointed. But let's get in some BTST trades as well on that note. Nirav, what's on your list?
Yeah, so you had mentioned Biocon. The first pick is Biocon. A good breakout in this stock. The stock went down earlier and it has been coming up since it retested the 220 odd levels. I believe it has witnessed a breakout above the 50 and 200-day moving averages, also consolidation breakout above 244. So I believe this stock can move up towards that 260, 265 odd zone. You can keep a stop loss of 240 and go long here. The second one is RCF. I believe RCF has witnessed a very big breakout. This is a 10-yearly breakout that it has got. This is the first time it has gone up above 150 odd levels in the 10 years. The volumes have been terrific. So I believe this stock will continue its momentum upwards. It can reach 180. So 180 is the target. You can keep a stop loss of 152 for your longs.
Okay, point taken. So that's the latest BTSC trade coming in from Neera. What about you, Kunal?
So very bullish on Clean Science. I think that's a stock which has been showing signs of some bit of recovery. But I think on the short-term basis, the stock is confirming a breakout of a major MACD pattern as well as a price swing resistance. So would expect a further up move on the stock of almost 1550 to 1600 range. Stop loss could be trailed to 1450 now from current levels. And the second would be about SBI. That's a stock which is also confirmed breakout above 620-25 mark. So I think it's been almost 3 or 4 days of the stock consolidating. Would expect the stock to make a fresh lifetime high for itself. 660 as a target, stop loss at 600.
Talking about some of the other stocks which have seen a bit of a spike, Go Fashion is the one which has seen a bit of a move in the last few minutes. CG Power, that also has seen quite a bit of spikes. That's a vertical move coming in on some of these counters in the last few minutes. Prestige Estate, let's add that to the list as well. There's a sudden 5% move, and while rest of the Adani name are clearly in the red, there's a bit of a move on Adani Ports on the positive side. So let's see. That stock is actually now holding up with a gain of around 4% in the last few minutes. Actually, in the last 5 minutes or so, all of these stocks have seen quite a bit of price volume action. But specifically, we are winding down the trading session. So let me thank Devang as well as Kunal and Neera for making time and speaking with us today. But for the day, it's been a lot better than what it could have been, because we are closing very close to the 20,900 mark for the index. Of course, on the gaining side, you have real estate names that are ending the day with a bit of a gain. Case in point being Prestige as well as Phoenix, Godrej Properties, DLF. These were the names that were holding in the green. From the pharma space as well, Biocon, a surge of 4%, Glaxo and Aurobindo were some of the names. Talking about the losers then, it was IT clearly that was coming under quite a bit of pressure. So TCS and Infosys, these were the top two drags, and then Tech Mahindra was the one which is down 0.7%. From the broader market, power, that was the team that was powering ahead. So NTPC, Power Grid, NHPC in terms of utilities was as it is doing well. Then you had the power financiers, so PFC, REC, IREDA, and then of course the industrials vertical, Schneider and other ancillary names were also participating. But overall, Aisha, I have to say that it's a okay close coming in. 20,900 is where we have been meandering around, and today also goes down in a similar fashion.
Oh yeah, it does, but there's lots more by way of trend today as opposed to how it was yesterday, wherein you couldn't really pick up any sectoral mover either way, or for that matter any broader trend in the market. So today, in that sense, you could blame it all on IT and some of the flat or underperformance coming in from some of the large banks. But yeah, lots happening outside the large caps. Piramal Enterprises, look at Trent, it's closed in at a 3% move today as well. Talk about the valuation frenzy that clearly doesn't apply to some of the names like Trent, Oro Pharma, Tata Power, BOB, Chambal Fertilizers, United Spirits, Metropolis, Gale, Torrent Pharma, Concord. There have been just so many buzzers within the broader end of the market. But let's see where tomorrow heads, given that you'll have the weekly expiry as well. We'll see you with all the market action tomorrow morning at 8 a.m.